A boy is sitting on the floor of his bedroom. He's not on a chair or on the bed. He's on the floor. The bed is unmade, the sheets wrinkled, the pillows sunken as if it wasn't worth the effort to fix it. His backpack is tossed in a corner, half open, with loose papers and a notebook sticking out. The room is quiet, an uncomfortable quiet, a heavy quiet. In his hand, he holds a cell phone with a cracked screen, a fracture running across the glass like an old scar. He's not playing, he's not watching videos, he's not wasting time. He's staring at a red chart plunging without breaks, a line slanted downward, constant, aggressive. The boy smiles. It's not a big smile, just a restrained gesture. He thinks, now yes, let all fall apart, let it collapse. When it does, I'll buy half the neighborhood with my savings. The problem isn't that he wants to take advantage of a crisis. That's logical. That's human. The problem is that he didn't understand what kind of crisis this is. In the collective mind, there's a very clear image of the perfect collapse, an almost romantic image. Prices falling, stores closing, crooked signs in shop windows, cheap houses, opportunities on every corner, candy being handed out at the supermarket checkout. A world on sale. That image didn't come out of nowhere. It isn't fantasy or an invention. It came from a real experience that marked an entire generation. But it stayed engraved as if it were a universal law, as if all collapses were the same, as if the system always broke in the same way. Spoiler, it doesn't. Years ago, there was a brutal. The economy didn't explode, it froze. Money disappeared, credit died. Banks turned off the tap. Companies shut down, jobs evaporated, and uncertainty became everyday life. It was painful, very painful, but it had one key feature. Those who had cash survived better. With the same money, you could buy more things. What used to be expensive became accessible. The system rebooted like an old console. Black screen, strange noise, and suddenly everything started again. Many people learned a lesson from that moment, but they learned it incompletely. They believed it would always work that way, and that's where the mistake begins. The boy goes outside. He walks a few blocks, looks at storefronts, looks at prices. Everything costs more. Rent went up, food went up, transportation went up, and even the simplest piece of candy now feels like a luxury. But he turns on the TV and hears another story. They say the economy is growing, that companies are worth fortunes, that the numbers are strong. So the question appears, which is it? The contradiction is only apparent because it's not that things are worth more. It's that money is worth less. When governments run out of options, they do what they've always done, print, not because it's a good idea, but because it's the last one. New bills, trillions, as if the problem were a lack of paper. That money enters the system and chases the same things as always. It doesn't create more products, it doesn't create more houses, it doesn't create more candy. It only chases. The result is inevitable. Everything inflates, not because it improves, but because the value of money dissolves. The boy sees prices rising and thinks it's a bubble, thinks it will pop, and that the right move is to wait. Mistake. This isn't a traditional bubble. It doesn't make noise or explode. It's a blender. It doesn't blow outward. It empties you from the inside. Waiting doesn't protect you. It wears you down. There's no widespread panic, no visible bank runs, no shouting. It's silent, like a constant drip, like termites working at night. Every day you lose a little, and you don't notice until you look back. While the boy waits, others have already moved. They don't shout. They don't make videos. They don't announce it. They simply move their money somewhere else. They're not looking for spectacular returns. They're looking not to lose. The stock market looks like a party. Everything green, records, celebrations, but if you look closely, not everything goes up. The same few giants rise. The rest barely move or fall back. It's not euphoria. It's shelter. Money doesn't flow in out of optimism. It flows in because it doesn't want to stay still. Collectible cards, limited figures, digital skins, objects that used to seem like a joke. The boy laughs and says people are crazy for spending money on that. But it isn't madness. It's rational panic. When you don't trust money, you look for things that can't be copied, that can't be printed, that don't depend on speeches. It's fear, but intelligent fear. Gold. Bitcoin. Two things separated by centuries, united by the same idea. They can't be manufactured at will. Normally they sleep, but now they wake up and rise along with everything else. That isn't normal. It's an alarm. They don't go up because they're magical. They go up because money is losing credibility. The boy starts to notice something. Waiting doesn't make him smarter. It makes him more exposed. Holding on to cash is like holding ice in the middle of summer. You can do it, but don't expect it to stay intact. The boy isn't looking for the perfect collapse. He's trying to survive the imperfect one. He understands a simple rule. If it can be printed, it isn't a refuge. He starts thinking about scarcity, about real things, about assets that don't depend on promises. And if he has fixed debts, he stops panicking because inflation, for once, does the dirty work for him. The collapse isn't going to ask for permission. It isn't going to knock on the door. It isn't going to announce itself on social media. It's already happening. Some people are still waiting for candy scattered on the floor. Others already understand that the floor itself is sinking. The difference isn't luck. It's understanding what kind of blow you're living through.